All right, so let's go ahead and look at 2.2. All right, so with 2.2, we're talking about, or with 2.1, if you remember, we talked about T accounts. We talked about that being a way for us to analyze transactions. We talked about debits are always on what side? And then credits are always on the right? And so if we want to increase an asset, are we going to be debiting that or crediting that? Say it again. Debit. Why? Because assets are always they're on the left side of the equation, therefore they increase on the left side or on the debit side, all right? Liabilities and owner's equity are on the right side of the equation, so they increase on the right side or the credit side. So we're just going to continue with that with 2.2 today when we talk about how they affect the account. All right, it says each transaction changes the balance of at least two accounts, and a list of accounts used by a business is called a chart of accounts. And here's an example of what a chart of accounts could look like. You see that they have everything categorized, so our assets are all 100 level accounts. All of our liabilities are 200 level. Our owner's equity are 300 level. Our sales, which is revenue, is 400, and then all of our expenses are 500. Another thing to recognize is if you look at our assets, those are placed in order of liquidity. And I mentioned that just briefly, talking about liquidity just means how easily something can be converted to cash, right? So obviously cash is going to be our most liquid asset, so it's first. Then we've got petty cash, our accounts receivable, so on and so forth, okay? Our liabilities are going to be listed alphabetically, and they'll tell us how, whether it's by last name or by company name, they'll let us know that. Owner's equity, we're always going to have our capital, then our drawing account. The drawing account would be how we would categorize when we're taking money out. So like those withdrawals that we did, that would actually go to our drawing account, okay? And then the income summary, which we'll deal with probably in chapter 5 or 6, okay? And for the expenses, those are all alphabetical as well. You'll notice that they're grouped in numbers of tens. We'll talk about why that is a little bit later on. So here, let's look at some transactions. It says we receive cash from owner as an investment. Okay. So what's happening here? What do you guys think? What two accounts? Okay. Perfect. Assets and owner's equity, but specifically what with assets? Cash. What are we doing with cash? Or what are we doing? Because remember, we're not saying increase anymore. We're going to use the actual technical term. So how do we increase cash? Cash is what? Cash is an asset. Asset is on what side of the equation? Therefore, it increases on the left side or the debit side. So we're going to be debiting our cash account for $2,000. And what are we going to be doing to that capital account? We're going to be crediting our capital account. So here we are. We're going to debit cash for that $2,000. We're going to credit Michael Delgado's capital account for that same amount. Okay? All right, we paid cash for supplies. Somebody help me out with that one. Okay, but what's the way that we would say that? What are we doing with cash? Debiting or crediting it? Do we have more or less cash? We have less. So if we have less cash, what are we doing? We're going to be crediting our cash, and what are we doing to our supplies? Debiting. Supplies is an asset. It's on the left side of the equation, so it increases on the left side or the debit side. We'll always have a debit and a credit part, and our debits and our credits will always be equal. Okay? Another thing to know is that debits always come first. So when we get into chapter 3 and we start journalizing this, our debits are always going to come first. They're going to be on the top line. So even when we're listing these and we're doing our T accounts, let's make sure we're always putting our debits first. which account are we debiting, which account are we crediting, okay? So there it is. We're debiting our supplies. We're crediting our cash. The changes happened on the left side. Therefore, they sort of offset each other. All right, here's another. Paid cash for insurance. What are we debiting? Insurance, because we have more insurance, and insurance is an asset. What are we doing with cash? We're going to credit our cash. There it is, just like supplies. Debiting prepaid insurance, crediting cash. Bought supplies on account from Canyon Office Supplies. So what are we doing here? Debiting supplies. Crediting what kind of account? Accounts payable, right? Because we owe them money. So we're going to be debiting our supplies. We're going to be crediting our accounts payable account. It's a liability. We owe that. Here's another. We pay we pay cash on account to Canyon Office Supplies. What are we debiting? Yeah. So, but what office supplies? Accounts payable, because we owe them less money, and we're going to credit our cash.